Have you ever looked at your paycheck and wondered how it can vanish so quickly, almost as if it dissolves the moment it lands in your account? And have you ever found yourself thinking about how long you will need to keep trading your time for money, day after day, year after year, only to feel like you are barely moving forward? And what if I told you that a simple habit, one that seems almost too small to matter, could eventually grow large enough to overtake your full-time income, not by luck, not by winning the lottery, but by quietly compounding in the background while you live your life? Because today I want to show you something that feels almost unbelievable when you first hear it, yet becomes crystal clear once you understand the math behind it. And that something is how investing just $120 a week into a single ETF like SCHD can eventually grow so much that it surpasses the income from your job and continues rising year after year without depending on your boss, your hours, or the economy around you. Now, before we continue, I want you to imagine a simple scenario. Imagine someone sitting at the end of a long workday, exhausted, staring at their bank balance, feeling like all the effort they put in barely moves the needle. And then imagine that same person discovering that the smallest weekly investment, something as manageable as $120, could snowball into a machine powerful enough to exceed what they earn working full-time. And at that moment, everything changes. Because once you understand what compounding is capable of when paired with consistent contributions, you stop seeing money as something that only comes from hours worked and start seeing it as something that grows while you sleep. To make this happen, we are talking about a very specific ETF, one that has become extremely popular because of its balance of high-quality companies, strong dividend growth and long-term stability, and that ETF is SCHD, the Schwab US Dividend Equity ETF, a fund created to track a group of reliable American companies that have long histories of paying and increasing dividends. And you do not need to memorize any complicated financial terms here, because the basic idea is simple. SCHD owns companies that are big, profitable, and consistent. Companies that have proven they can keep paying dividends even when markets get shaky. And this is what makes SCHD special. It is not about chasing the highest dividend yield possible. It is about choosing quality, choosing businesses that generate real cash year after year, and sharing that cash with you. When SCHD selects companies, the fund looks for three things, and each one increases your chances of long-term success. The first is a history of paying dividends for at least 10 straight years, because a company that can consistently return money to shareholders for a decade has already survived economic cycles, crashes, recessions, and unexpected events. The second requirement is dividend growth, meaning the company must not only pay dividends but also raise them over time, which is one of the strongest indicators of financial health and long-term strength. And the third factor is financial stability. SCHD looks at return on equity, cash flow, and a company's ability to operate efficiently. And this creates a portfolio that is not just profitable today, but is built to stay strong for decades, which is why so many long-term investors trust it. Inside SCHD, you will find companies you already know, companies you probably buy from or use every single week, without realizing they are contributing to your future wealth. If you own the ETF, companies like Home Depot, which sells the materials used to build and renovate homes across the country, and which has increased its dividend for over 30 years. Or Cisco Systems, a giant in network technology that powers communication systems around the world. Or Texas Instruments, a leader in semiconductors that produces components used in everything from cars to household electronics. And these businesses, along with dozens of others inside SCHD, generate billions in profit and share those earnings with investors like you every single year. So by owning SCHD, you're investing in the strength and productivity of the entire American economy without needing to choose individual stocks. But the real magic begins when we combine SCHD with something you control, something incredibly simple, and that is your consistency. Because once you commit to investing $120 every week, the entire game changes. You are no longer waiting for someday. You are building your future every 7 days, and each contribution becomes another brick in a growing financial foundation. And when you look at the numbers, you realize how powerful this becomes, because $120 a week might feel small, but over time, it becomes a force that grows faster than you expect, especially when you reinvest your dividends and allow your shares to multiply. To make this even easier to visualize, Imagine breaking down the $120 into smaller pieces. It is roughly $17 a day, less than what many people spend on small purchases they barely remember later. And yet that same amount, when redirected into SCHD, becomes fuel for long-term compounding. And the difference between spending it and investing it is enormous, because one disappears instantly, while the other stays, grows, multiplies, and eventually pays you back again and again. Now let's walk through exactly what happens when you invest $120 every week, which becomes $6,240 a year. And let's follow this money not for 1 year or two, but across a lifetime, because compounding becomes dramatic only when you give it time. And SCHD has consistently proven that it can deliver both price appreciation and dividend growth over long periods. And these are the two ingredients you need to eventually surpass your full-time income. If you stay consistent for 5 years, your contributions alone will total just over $30,000. But thanks to growth and reinvested dividends, your portfolio would be worth significantly more, already proving that your money grows faster than you deposit it. And if you continue for 10 years, your deposits will reach $62,400. But again, your portfolio will be worth far more than that, because the gap between what you invested and what your account is worth begins widening dramatically. And this widening gap is the moment when compounding becomes visible, when you look at your numbers and realize that your money is finally beginning to work harder than you are. When you continue for 20 years, everything accelerates. Your deposits reach around $124,000, but your portfolio could grow several times larger than that, often crossing the $500,000 mark, depending on returns over those years. And this is the point when your dividends alone can feel like a part-time income, paying you hundreds or even thousands every single month simply for owning good companies through SCHD. And the best part is that unlike job income, dividend income does not require you to trade time for it. It does not require you to clock in. It does not ask for approval. It just arrives. But the real turning point, the moment when $120 a week surpasses your full-time job income, appears around the 30-year mark, when your total deposits reach roughly $187,000, but your portfolio can exceed $2.5 million. And at that level, the dividends alone can pay well over $180,000 a year, which is more than most full-time jobs. And the craziest part is that the money came from a contribution small enough that almost anyone can manage it with discipline and focus. And at this stage, your dividends could reach over $15,000 a month, which is the kind of income that allows you to choose how you live your life rather than letting your job dictate it. This is why understanding compounding matters, because the numbers start small and innocent, but if you stay consistent long enough, they expand into something that looks impossible when you first hear it. And yet the math is extremely simple. Your contributions keep building. The companies inside SCHD keep paying dividends and raising them. Your shares keep increasing as you reinvest those dividends. And each new share produces more dividends, creating a slow but unstoppable snowball that eventually becomes so large it moves faster than you do. And that is when your investment income surpasses your job income. And the best part of all is that you never needed to time the market, predict anything, or take wild risks. All you needed was a weekly habit, a reliable ETF filled with strong companies, and enough patience to allow the future version of you to enjoy the rewards that the present version of you chose to build. Which is why $120 a week into SCHD can truly surpass your full-time job, not through chance, but through simple math and disciplined consistency. In the end, the message is simple. Your job might give you income today, but consistency gives you income for life. And once you see how powerful this can be, you will never look at $120 the same way again. So leave a comment with your thoughts, subscribe, and see you soon. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.